In the heart of the Middle East lies a narrow strip of water, only 21 miles wide at its narrowest point. It is the Strait of Hormuz. It might look small on a map, but it is the jugular vein of the global economy. If this vein is severed, the world as we know it could change in a matter of days. Following the military conflicts between the US, Israel and Iran that began at the start of March 2026, the situation in the Strait of Hormuz has reached a critical stage. Official and de facto closure. The Iranian Revolutionary Guard Corps, IRGC, officially announced the closure of the strait on March 2, 2026, declaring that any vessel attempting to pass will be targeted. Maritime traffic at a standstill. According to the latest reports from the region, March 10, 2026, commercial vessel traffic in the strait has decreased by 80 to 90%. While an average of 130 to 140 ships used to pass daily, this number has now dropped to single digits, 2 to 3 ships per day. Withdrawal of shipping giants. Global shipping leaders, including Maersk, Hapag-Lloyd, MSC, and CMA CGM, have announced the total suspension of their transits through the Strait of Hormuz due to security risks and the cancellation of insurance coverage. Military interventions. There are reports of drone and missile attacks targeting several commercial vessels at the entrance of the strait. Meanwhile, US Central Command, CENTCOM, continues its operations against Iranian naval assets in the region. Economic impact. As the strait is functionally closed, global oil prices have surged rapidly, and shipments are being rerouted to much longer paths, such as the Cape of Good Hope. Why is it so important? Every single day, more than 20 million barrels of oil pass through this strait. That's about 20% of the world's total consumption. It's not just oil, it's also liquefied natural gas, LNG, from Qatar, which powers European and Asian industries. If the strait closes, energy prices would skyrocket. Analysts predict oil could reach $200 per barrel. High energy costs lead to high transportation costs. This means the price of everything, from the bread on your table to the smartphone in your pocket, will increase. The US Navy, along with its allies, maintains a constant presence here. Any attempt to block the passage would trigger a massive military response. This could lead to a regional or even a global conflict involving powers like China and Russia, who rely heavily on Middle Eastern energy. The Strait of Hormuz is a reminder of how fragile our global system truly is. Our modern life depends on a few miles of water. The question is not just what if it closes, but how do we prepare for a world where energy is no longer guaranteed? The Strait of Hormuz is not just a geographic location. It is a global economic thermostat. While total closure is rare, even a partial disruption creates an immediate ripple effect. In the next 60 days, we are not looking at an end-of-the-world scenario, but a systematic stress test of the global economy. In the first week, the impact is psychological. Oil prices would likely jump by 15 to 20%, not because of a physical shortage, but due to risk premiums. Insurance companies would immediately raise premiums for any vessel entering the Persian Gulf. For a 60-day horizon, this means the cost of every barrel of oil delivered to Asia or Europe increases before it even leaves the port. By the second month, the focus shifts to East Asia. China, India, Japan, and South Korea rely heavily on this route. If the flow of LNG, liquefied natural gas, from Qatar is delayed for 30 days, we would see industrial slowdowns in these regions. It's not a total collapse, but a reduction in manufacturing output, which eventually leads to a shortage of consumer electronics and automotive parts globally. Logistics becomes the primary bottleneck. If ships are forced to bypass Hormuz and sail around the Cape of Good Hope, it adds 10 to 15 days to the journey. Over 60 days, this disrupts the just-in-time inventory systems. We wouldn't see markets crashing, but we would see a flight to safety. Investors would move away from aviation and tourism stocks toward commodities and defense sectors. Governments would intervene by tapping into strategic petroleum reserves. The US, China, and IEA members have enough oil to stabilize the market for several months. Therefore, the 60-day outlook is more about managing price volatility and preventing a diplomatic escalation than a total economic halt. The current escalating conflict between Israel and Iran, with the United States positioned as a primary security guarantor, has transformed the Hormuz option from a distant geopolitical threat into a chillingly plausible reality. In this high-stakes shadow war, any direct strike on Iranian energy infrastructure or sovereign territory could trigger Tehran's ultimate retaliatory card, the physical or tactical closure of the strait. Unlike previous regional skirmishes, a full-scale confrontation involving US-led forces would leave no room for business as usual. If Iran were to utilize its vast arsenal of anti-ship missiles, suicide drones, and naval mines, the global insurance market for maritime trade would effectively vanish overnight, deeming the route uninsurable. The economic fallout of such a closure would be a hyperinflationary black swan event. We are no longer discussing a simple price hike. We are looking at a total physical supply shock. Analysts warn that oil could shatter the $200 barrier, sending a shockwave through global markets that central banks are currently unequipped to handle. For countries like China and India, which are the primary engines of global growth, a prolonged blockade would lead to industrial paralysis. Furthermore, a military operation to reopen the strait, a complex mine-clearing mission under active fire, could take months. During this period, the just-in-time global supply chain would suffer a systemic collapse. In this scenario, the Strait of Hormuz ceases to be a mere shipping lane and becomes the front line of a global crisis, where the casualty is the very foundation of modern energy security. The world is beginning to realize that in the triangle of Washington, Tel Aviv, and Tehran, the smallest geographic point is the one with the power to bankrupt the global future. In conclusion, the Strait of Hormuz is a delicate balance of power. A 60-day closure would reshape our monthly bills and investment portfolios, but the real cost would be the long-term shift in global energy security. This is the Origin Archive. Stay informed, stay prepared.